Yeah. Welcome to a special edition of Newsmakers. The biggest news in the market, other than, of course, the big political news, is SMBC buying a 20% stake in Yes Bank. This means a seminal change for the bank itself. 5 years ago, it was in trouble. Now it looks like the SBI prop is no longer needed. The bank can stand on its own feet and someone is willing to buy it for capital investment. But what other advantages accrue to Yes Bank because of this relationship with a very big global bank, Japanese bank, SMBC? To answer all those questions, I have with me the Managing Director and CEO of Yes Bank, Prashant Kumar. Good morning, Mr. Kumar, and thank you very much for your time. Congratulations first. This is a seminal change for the bank itself.
No, thank you so much. I think it's a very, very significant transaction in the transformation journey of Yes Bank.
First, if you can tell me, when does it get completed? Because I'm still seeing Sumitomo Bank to buy a 20% stake. When do we say they are holding a 20% stake?
So now it would require the approvals from Reserve Bank of India and Competition Commission of India. And we are hopeful that the whole transaction would be completed in the second quarter of this financial year.
Okay, so we understand that at that time, the Japanese bank will be able to appoint 2 directors on the Yes Bank board. Now tell me the journey from there. How does life change for you? Are you, how will you liaise? Will they give you more trading partners? Will they give you MNC clients? What will they give you?
I think the first important thing, there has been a overhang on the bank where the question was that SBI being 24% equity holder cannot continue for a long time. It means we need to have a strategic partner. And that was very critical for us. I think the SMBC, who are the second largest financial banking group in Japan and 15th largest in the world. And they are known for their corporate governance, reputation. They coming and investing into Yes Bank at 20%. That is also a confidence.
Yes.
That is a confidence in the franchise. That is one thing. Second thing, they are, as a strategic investor, always a very long-term investment. Unlike private equities, where always there is a short-term objective, it's a long-term investment strategy. So this investment would definitely build this franchise for future. So we are quite hopeful that this investment would be an opportunity for re-rating of the bank. Because this overhang...
That is discussed.
Yes.
The re-rating is there because you don't need SBI crutch anymore. Somebody has respected Yes Bank for the franchise it is.
Right.
And someone very reliable. I'm asking you for life after second quarter.
No, I think it's important because the life, when we talk about what is going to happen in the future, how it is going to give that kind of support. Re-rating itself would give us a lot of opportunities, both on funding side as well as on the lending side. Because there are a lot of corporates, government entities, who don't place deposits, who don't allow you to work with them unless there is a minimum threshold of the rating. That is one part.
Oh, you expect a rating upgrade shortly?
That's why I was talking about, we are looking for a re-rating of this stuff. Because in the re-rating, one of the issues was always in terms of what is going to happen to the SBI stake.
Yes.
That is one part. The second part, that with the re-rating, definitely your funding cost would also come down. The third part is such a respectable foreign institution investing in you. It also gives you the mileage in terms of opening your door for a lot of other things. In terms of, I'm not saying a direct connect, but definitely the doors for large corporates in doing their transaction banking, in terms of providing our digital solution to them, definitely would open up for us.
You expect more fee income from the third quarter onwards because of trade finance or whatever?
It never happens like this. It's not like a switch, though. They would come in and the third quarter there would be fee income. This is a journey. But I think this kind of investment would definitely leap forward in the second phase of the transformation journey.
But are you sure of the re-rating very soon? Because it is only 20%. It's only 2 board seats. Can re-rating come like as early as a quarter or 2?
No. So fundamental issue was more in terms of a question from the rating agency was always what is going to happen to the stake of State Bank of India.
Yes.
Okay. And everybody wanted to see the entity who is going to replace State Bank of India, whether that would be a long-term strategic player. Because if it is not a long-term strategic player, piecemeal shareholder. So I think it would definitely give a confidence. The second aspect is in terms of if bank require capital in future, okay, there are no uncertainties. So I think that is also an important point for consideration whenever the rating agencies consider for the rating upgrade.
Any reason why they went for 20? Because we were expecting at least 24.9, as it were, so that open offer is not triggered. There were a set of people who were expecting 26 and open offer. Why, in your opinion, they didn't go for that?
No, I think they can answer that. But the question is always, you always keep a room for certain eventualities. Because the moment you cross 24.99, right, then the open offer would trigger. Okay, if you are having a 20%, and maybe if there is any capital requirement from the bank side, at least there is a room available for them.
Is that the reason why they didn't?
No, I'm not making any comment on this. I'm only saying anybody would definitely, if they know like 24.99 would trigger an open offer, they would just like to keep a room available for any such kind of requirements.
You mean we can always do it later,
yes.
Is what you're saying?
Yeah.
But I'm sure you met the top management of SMBC will have met you several times. They are buying your bank. They are not buying SBI. So more meetings with you than SBI. What is the impression you got? Will they be okay with 26% voting right but 51% stake? Or, equity stake at 40, 50, whatever, but voting only 26. Will they be open to it?
So my impression is that first, they are very bullish about the Indian banking industry.
Yes.
Very bullish about the Indian economy. And they have respect and the confidence in the franchise which we have built up. Okay? The other part which you are asking is something which they need to decide and take it forward.
Okay. I am still not able to wrap my head around why 20 and not 24. Because I'm sure SBI was willing to give more and all the banks were willing to give more stake. For them, it was only a financial investment. You never tried to crack why not 24?
No, I think it makes sense. Like if you know that you are breaching a particular threshold, you never do that. Okay. You always keep a distance
from that
with the car which is running in the front. No?
Yeah. Okay. What about the stake that they have in Fullerton, or rather now it is called SMICC? They bought that NBFC. Is there a plan to merge that into Yes Bank? Because ultimately RBI is saying all lending business, a bank should not do lending through the bank and through a NBFC. This is not a subsidiary because they are not yet owners.
Yeah.
But is that part of the game plan to merge that NBFC?
No, I think this is too early to make that comment. Because now they are coming with a 20% and they would be like a public shareholder.
Okay. Yeah, so they don't get any special reasons.
Yes.
But will you look at it, since it is common management? From your point of view, will it make sense?
No, that's why I'm saying this is too early. I think this is the first time we need to see that how we need to take this forward.
Okay. Will they keep their 3 branches or will that need to be merged?
No, again, it would depend on their own strategy and how the regulator would think about it.
But if they went beyond 25, if they went to 25, then they will have to give up those branches, right?
I think I'm not so much expert on the regulation.
Okay, so that's a question for RBI
yes,
and
yes.
SMBC.
They need to answer.
Okay. Now, coming back to your relation with SMBC, have you all drawn up any game plan of regular visits after the deal is completed to improve liaison?
No, I think this would be too early. I think the first thing would be to close the transaction. Their two nominees, directors, would be inducted into the board. And I think once that process is over, then we would start thinking in terms of going forward.
Okay. You know, the news that SMBC is looking for a stake in Yes Bank is at least 1 year old. And now, even in the last 1 week, the media was full that it is almost a done deal. It has inched closer. Have you already noticed a fall in the cost of funds, a better openness on the part of bulk depositors to give you money a little cheaply?
Latha, you are a veteran in this field. You know much better than me. These kind of news items would not result into any such kind of change in the business dynamics. Okay. It takes its own time.
Okay. Well, just tell me this. What is your new goal in terms of ROA and ROE for the bank, or at least ROE? Now that you have the confidence of capital, can you give us some guidance?
So we actually came out, and this is the guidance which we have given to the investors, that we are looking for a 1% ROA by FY27. And we would like to exit the FY26 with 1% ROA. It means the fourth quarter. Fourth quarter, we would like to exit with a 1% ROA. And for the full FY27, we would be targeting a 1% ROA.
Okay.
So this is our business strategy. I think once SMBC deal is concluded, their nominee director would come. We would definitely, as a part of the annual exercise, we would examine whether there is any need for changing our strategy or changing the goals.
Okay. Well, I have a lot more questions for you in terms of cost of funds and the normal business questions. I need to take a commercial break. For Bazaar viewers, it will be time for Chartbusters. You will get to hear the whole conversation with Mr. Prashant Kumar after market hours.